Hello and welcome back to the Deep Dive. It is Monday, February 23, 2026. And today we're doing something just a little bit different.
Yeah, a bit of a pivot today.
Right, because usually when we grab a company's financial results for you, we're looking for a snapshot of the past, a report card.
Exactly. You're asking, how much did they sell? Did they make a profit?
Did they beat the street?
Right.
It's usually a look in the rearview mirror.
Exactly. But the document we have in front of us today, the full year 2025 earnings report from Hims and Hers Health it feels less like a scorecard and more like a map.
I like that.
And honestly, it's a map to a completely different version of how healthcare works than what I grew up with.
I think that is the perfect way to frame it, really.
Because for the longest time, let's just be honest, Hims and Hers was put in a very specific box.
Oh, absolutely.
They were, that website for hair loss pills,
Yeah.
or the place to get ED meds online.
Right, the Subway ads. Yeah, the Subway ads. It was convenient, sure, but it felt, I don't know, it felt niche. Like a lifestyle brand almost.
Yeah, a direct-to-consumer lifestyle brand.
But looking at these numbers from 2025, I think we just have to throw that box away.
Oh, the box is completely gone. I mean, the scale we're seeing in this report is just startling. We're watching a company graduate from a telehealth startup to a legitimate healthcare heavyweight, and we're watching it happen in real time.
So the mission for this deep dive is pretty simple. We are going to unpack how Hims and Hers grew their revenue by nearly 60% in a single year.
Which is wild.
Which, by the way, is totally unheard of at this size. We need to figure out who is actually paying them all this money because the user numbers, they tell a really weird story.
They do.
And we need to look at the massive, risky bet they're making on the future of personalized medicine.
And we definitely have to talk about the weight loss elephant in the room.
Oh, absolutely. The Ozempic-sized elephant. We are definitely not skipping that. But let's start with the headline numbers. The top-line revenue for the full year 2025, what are we actually looking at here?
We are looking at $2.35 billion. That is the total revenue for the full year.
Okay, 2.35 billion. That is a massive number.
It is.
But, in the tech world, big numbers get thrown around like confetti. So contextualize that for me. Is this just normal growth for a tech-adjacent company?
Far from it. The context here is velocity. So in 2024, they did about $1.47 billion. So mathematically, that is a 59% increase year over year.
Wow.
But think about what that means operationally. They added nearly $1 billion in brand new revenue in just 12 months.
Right. And usually when companies cross that billion-dollar threshold, the law of large numbers just kicks in.
Yeah, it becomes an anchor.
It's like gravity. It's much harder to double a giant than it is to double a dwarf. You usually see growth slow down to, 20%? Maybe 25.
Exactly. But Hims and Hers is accelerating. They're growing like a scrappy startup while operating at the scale of a large cap company.
But here is my cynicism kicking in.
Let's hear it.
Growth is easy if you're selling dollar bills for 50 cents.
Sure.
I mean, I can grow my revenue to $1 billion tomorrow if I spend $2 billion on marketing. Is that what is happening here? Are they just buying this growth with unsustainable spending?
That is the very first thing I checked. I went straight to the bottom line to see if they were just burning cash to fuel this furnace. And the answer is no. They aren't buying the growth, they are earning it. They reported a net income of $128.4 million for 2025.
So they're GAAP profitable, like real money in the bank.
Fully profitable.
Yeah.
And if you look at the metric Wall Street loves, adjusted EBITDA.
Which strips out the weird accounting stuff.
Right. It basically strips out stock-based compensation and some accounting nuance to show the core cash-generating power of the business operations. They hit $318 million. That is up from about $177 million the year before.
So they nearly doubled their core profitability while growing revenue by 60%.
It's a rare combination. Usually in high-growth tech or health tech, you have to pick one. You pick growth or you pick profit.
Right. Investors usually forgive you for losing money if you're growing super fast.
Exactly.
Yeah.
But Hims and Hers is managing to do both simultaneously.
Okay, so the what is definitely impressive, but I'm way more interested in the how.
The mechanics of it.
Yeah, because I was looking at the subscriber numbers in this report, and honestly, I was confused. I actually pulled out my calculator because I thought I was misreading the chart.
You saw the disconnect.
It is a glaring disconnect. Revenue is up 59%, but when I looked at the subscriber count, the number of actual humans paying for the service, it only went up 13%. They ended 2025 with about 2.5 million subscribers.
Which is still a lot of people, to be fair.
It is, but look, if I run a coffee shop and my customer count only goes up 13%, but my overall revenue goes up 60%.
You're charging a lot more for coffee.
Right. That usually means I just jacked up the price of a latte. Is that what they did? Did they just raise prices on everybody?
No, and this is probably the single most important insight in this entire report. It isn't price gouging. It's value expansion. They have a metric called monthly revenue per average subscriber. In 2024, the average user was worth about $65 a month to Hims & Hers.
Okay, $65.
In 2025, that number jumped to $83. That is a 28% increase in wallet share.
That is massive. Getting a consumer to part with an extra $20 a month every single month is incredibly difficult. I mean, look at Netflix. They fight wars over a $2 price hike.
They really do.
So how is Hims & Hers getting $20 out of people?
This brings us to the strategy shift. CEO Andrew Dudum actually talks about this in the shareholder letter. For years, Hims & Hers was purely transactional. You have a problem, say, hair loss, you come to the site, you get a pill, you leave. It was a vending machine.
Right. Click here, get meds.
Exactly. But now they are shifting to personalized care. They aren't just selling the generic pill anymore. They're selling compounded treatments, multi-condition plans, and crucially, they're moving into diagnostics.
Diagnostics. I saw that term labs thrown around in the letter quite a bit. But labs sounds very clinical. Are they building physical laboratories?
Well, in a sense, they are building the infrastructure to process medical data.
Mm-hmm.
When they say labs and diagnostics, they mean they are asking you to do blood work, they are checking your hormone levels, they are monitoring biomarkers. They are basically trying to give you a dashboard for your own body.
Which changes the relationship completely.
Precisely. If I sell you a bottle of generic pills, you can just go to Amazon next month and buy the exact same pills for $1 less. I have no leverage. But if I have your blood work history, your hormone trends over the last 6 months, and a custom compounded medication that is tweaked specifically for your unique biology.
You're stuck.
Stuck is the cynical word. Retained is the business word.
Fair enough.
It creates a moat around the customer. It makes the platform sticky. You aren't just a customer anymore. You are a patient. And a patient doesn't switch doctors just to save $5.
So that $83 a month isn't just because the pills are more expensive. It represents a bundle of services.
It is cross-selling and upselling.
Yeah.
Maybe you came in for hair loss, but now you see they have a weight management program that uses your lab data, or you realize you need hormone therapy. You're becoming a whole health user.
It's an ecosystem play, like Apple. You buy the iPhone, then you get the watch, then you need the iCloud storage to back it all up. Hims & Hers wants to be the operating system for your body.
That is a very apt analogy. And just like Apple, they are realizing that the U.S. market, while huge, does have a ceiling. To keep this up, they have to go global.
And I noticed a big change in how they report their money regarding that. They used to split it by online versus wholesale,
Yeah.
like what we sold on the app versus what we sold at Target or Walmart.
Right, and starting Q1 2026, they're scrapping that entirely. The new buckets are United States and rest of the world.
You don't make a dedicated reporting bucket for rest of the world unless you expect rest of the world to actually matter.
And looking at Q4 2025, it is definitely starting to matter. Revenue from the rest of the world segment hit $63.7 million in the fourth quarter alone.
Which is, I mean, still small compared to the billions in the U.S.
It is small in absolute terms, yes. But look at the growth rate. It is up 825% year over year.
825%. That is explosive. That isn't just organic word-of-mouth growth. That is an invasion.
It is. They launched to the European Union. They launched operations in Canada. They deepened their footprint in the UK. They are aggressively planting flags everywhere. And they aren't just building from scratch either.
Yeah.
Did you catch the note in there about the acquisition?
Oh, the eucalyptus deal.
You know-
I have to admit, eucalyptus sounds like a spa. Or maybe a koala snack. But I assume they are a healthcare company.
Eucalyptus is a major digital health player. They likely have a very strong footing in markets where Hims & Hers wants to be, places like Australia or parts of Asia. The report says the deal is expected to close in mid-2026.
But why buy them? Why not just launch Hims Australia and do it yourself?
Speed and regulation. Healthcare is incredibly messy. Every country has different rules, different prescription laws, totally different supply chains.
Right, the red tape.
Exactly. Instead of spending 3 years fighting local bureaucrats to set up a pharmacy in a new country, you just buy the guy who already has a license, the doctors, and the customer base.
So they're just buying their way into new territories to keep that aggressive growth rate up.
Exactly. It confirms that their ambition is global now. They don't just want to be the digital doctor for America. They want to be the digital doctor for the world.
Okay, so we have massive U.S. growth, exploding international growth, and rock-solid profitability. That sounds perfect, almost too perfect, which is exactly why I went hunting for the bad news.
And what did you find?
I found something that actually made me pause. Free cash flow.
Ah, yes.
In 2024, they were printing cash. But in Q4 2025, they actually burned money. They had a negative $2.6 million in free cash flow.
Which looks alarming on the surface.
It does. If you are so profitable, why is your actual bank account going down? And I also saw their gross margin slipped. They dropped from 79% in 2024 down to 74% in 2025. For a software or tech-enabled business, a 5% margin drop is usually a massive red flag. Did they lose their discipline?
No. I don't think it is a loss of discipline at all. I think it is a change in phase. To understand it, you have to look at the CapEx line capital expenditures.
That's their spending on physical stuff, right? Like
Yeah.
equipment and buildings.
Exactly. Hard assets.
Yeah.
In 2024, they spent about $41.6 million on CapEx. In 2025, that number skyrocketed to $226 million.
Whoa. That is over a 5x increase. What are they buying? Gold-plated desks for the headquarters.
They are buying the ability to scale. Remember those labs we talked about? Remember the personalized compounding of medicines? You can't do that with just software code. You need physical pharmacies. You need robotics to mix the compounds safely. You need massive distribution centers that can handle millions of unique personalized shipments every single month.
Oh, I see. So they are building the factory.
They are building the infrastructure. CFO Yemi Okupe addressed this directly in the letter. He said they are using their strong balance sheet to invest in scaling new specialties and advancing technology. That drop in free cash flow isn't because the business is failing. It's because they are taking the profit they made and pouring it right back into the foundation of the house so they can build a second story.
So it's like renovating your kitchen. Your bank account looks terrible that month, but the overall value of your house goes way up.
Correct. And regarding the gross margin drop to 74%, that is actually part of the exact same story. Selling a generic pill that someone else manufactured has insanely high margins. It's just shipping a box. But making a custom compounded pill yourself, that costs a little more, there's labor involved, there are raw materials.
But wait, investors usually hate lower margins. Wall Street wants those 90% software margins.
True, but here is the trade-off. The custom pill keeps the customer paying $83 a month instead of $65. They're trading a few percentage points of margin for a massive increase in total dollars and long-term customer retention. It is a trade almost any business would make every single day of the week.
Okay, that makes a lot of sense. You take a slightly smaller slice of a much, much bigger pie. Let's look forward then. They gave guidance for the current year, 2026. What are they promising the market?
They aren't slowing down. They are projecting 2026 revenue between $2.7 billion and $2.9 billion.
Pushing right up toward that $3 billion mark?
Yes, and adjusted EBITDA between $300 million and $375 million. So continued highly profitable growth. However,
Here comes the however. I knew there was a catch.
there's a very specific, very critical asterisk in that guidance. It's about the weight loss drugs.
Right, the GLP-1s, semaglutide.
Right. A huge driver of their recent growth has been compounded semaglutide. This is essentially a generic or custom mixed version of the famous drugs like Ozempic or Wegovy.
Which people have been buying from Hims and Hers because they literally couldn't find the name brand stuff at their local pharmacy. There was a massive national shortage.
Correct. The FDA allows compounding pharmacies to make copies of patented drugs when there is an official recognized shortage. It's a mechanism to help patients get access to necessary care. But shortages don't last forever.
So what happens if the shortage ends? What happens if Eli Lilly and Novo Nordisk finally figure out their supply chains and the FDA comes out and says, okay, shortage over, no more compounding?
That is the billion-dollar risk. The guidance for 2026 explicitly assumes the ongoing ability to provide access to compounded semaglutide. If the regulatory environment changes drastically or the shortage list is cleared, that specific revenue stream could dry up almost overnight.
That feels incredibly precarious. They are building a budget on what is essentially a temporary regulatory window.
Well, they would argue it's not a window, it's a necessary release valve for a strained healthcare system. But yes, it is a significant risk. However, this goes right back to the lab strategy we discussed earlier. If Hims and Hers was just a vending machine for semaglutide, They would be dead in the water if the shortage ended. But if they're your doctor, if they are managing your entire weight loss journey, monitoring your blood work, checking your vitals, and adjusting your dosage, then if the compounded drug goes away, they just seamlessly switch you to the name brand.
Ah, you stay for the care, not just the chemical.
That is the bet. They want to own the relationship so deeply that the specific drug you're taking doesn't matter as much. They want to be the gatekeeper for your health.
And if they actually succeed at being that gatekeeper, I mean, the long-term targets in this report are pretty wild. I saw the CFO mention the year 2030.
No, 2030 moonshot, yes.
Yeah.
They are aiming for at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA by 2030.
6.5 billion. That is not a niche telehealth startup anymore. That is a Fortune 500-sized healthcare giant.
It absolutely puts them in the league of major hospital systems or mid-sized pharmaceutical companies. It implies that they truly believe this shift to digital-first healthcare is permanent.
That's the core thesis, isn't it? They are betting that in 2030, we won't want to drive to a physical clinic, wait in a lobby for 45 minutes next to someone coughing just to see a doctor for 10 minutes.
Exactly. They're betting you will want to open an app, see your latest lab results visualized perfectly on a chart, and chat with a specialist instantly from your couch. It is the Amazonification of primary care.
Which brings us right back to that massive CapEx spend, that $226 million they spent last year. That is them building the Amazon fulfillment centers for healthcare.
Exactly right. You cannot execute that 2030 vision without the massive logistics network they're building right now in 2025.
So let's just recap the source material here for you. It's February 2026. Hims & Hers is generating $2.35 billion. They are solidly profitable, and they are pivoting hard from just selling pills to actually managing health via diagnostics and personalized compounds.
Yes.
They are expanding globally at a breakneck pace, and they're spending hundreds of millions of dollars to build a physical moat around their digital business.
That is the perfect summary. They have graduated. This is a heavyweight contender now in the healthcare space.
It is truly fascinating. You know, for the last 10 years, telehealth always felt like a convenience play to me. Like, oh, I have a sinus infection, get me antibiotics fast. It was purely transactional.
It was essentially urgent care on a smartphone screen.
Right. But reading this report, looking at the numbers with the labs, the chronic weight management, the hormone therapy, it feels like we are rapidly moving toward a world where your primary care doctor literally is an app.
I think that is exactly where we are heading, without a doubt.
Which leaves me with a final, slightly provocative thought for you to mull over as we wrap up. If Hims & Hers actually hits that $6.5 billion target in 2030, does that effectively make them the biggest hospital in the world?
A hospital with 0 beds.
A hospital with 0 beds, millions of patients, and more real-time biometric data than any single health system has ever possessed in history.
It completely redefines the whole concept of a medical home.
It really does. And obviously it raises about 1,000 questions about data privacy, continuity of care, and eventually the role of AI in all of this. But just looking purely at these financials today, it is clearly a winning bet right now.
The market certainly seems to think so.
Well, on that note, half really exciting, half slightly Black Mirror, we will wrap up this deep dive on Hims & Hers.
Always a pleasure to dig into the numbers with you.
Thanks for listening. Keep thinking about where your healthcare is actually coming from, and we will catch you on the next deep dive.